Welcome back to Golden Rule Radio. We have two offers for you today. First is the McAlvany Intelligence Advisor newsletter for February. It has an article on gold. It addresses the Dow to gold relationship, which we believe will be a game changer in the next few years. So you don't want to miss that. We will send that to you for free.
Yeah, Robert, that's a $13 value. And just give us a call at 800-525-9556. Just mention Golden Rule Radio and we'll make sure we get that off to you.
The second thing is we will be doing an event in Kansas, in Topeka, Kansas, a month from today, on March 20th. David McAlvany's been invited to be the keynote speaker at the Kansas Prayer Breakfast, kind of like the National Prayer Breakfast. He'll be speaking that morning, and then that evening we'll be hosting a special presentation where David will be talking about the markets, the economy, the world, events, trends, coming trends. It's free for those who RSVP, so check the link in the description notes below. Moving on to the markets, we have gold at a 10-month high, pushing above 1340. Boy, I like this action in gold.
Isn't it fun? We got as high as 1347, and Miles is going to tell us every reason why.
Yeah, Miles had a brilliant chart a couple weeks ago on a 3 drives up pattern that he said that we were going to see this extension into this level, testing the previous highs. And so I like that call, Miles. A couple weeks ago you had this. We do have divergence still going on between price and RSI. So where are we today, Miles?
Yeah, Robert, the RSI, or the Relative Strength Index, kind of that average of buys versus sells over a period of time, definitely tells you which trend you see the market going regardless of where the price is going. And you can see some interesting indicators in that correlation between just dollar price and how some of these indicators like RSI respond. So speaking of that price, we did see what looks now like a 3 drives pattern with that divergent RSI we're drawing on the chart here now, coming right up into the lower end of kind of our top historic range. So you can kind of see over here on the left side of the chart, we've just come into sort of the bottom of the previous trading range between about 1345 and 1365. So we had a discussion last week and kind of came to the conclusion if gold can stay above 1300, there's really nothing between here and getting into the old high range. Lo and behold, 1 week later, here we are. So over the next week, we should see one of two things happen. Either we'll go ahead and have that immediate pullback that we've been hoping for, or we're going to stay in this range and it could end up building a new base here.
Yeah, as we said last week, gold is going higher. We saw the weakness we wanted. There could still be a pullback here where we see lower numbers before we head higher. But again, we'll state it. This is your opportunity, as we said last week.
Your words are ringing in my ears,
Gold
Robert.
was at 1305, 1310. Now it's 1340. This is your opportunity. Buy on weakness.
You did say that last week, and it's funny because those words have been ringing in my ears. And it's okay that you've missed $35 of this move. It's still a great opportunity. But again, like he's saying, any dip, this is an opportunity.
All the little micro moves that we talk about each week here, I think we need to zoom back out a little bit on gold and see where we've been, see where we're going. We've been $300 lower than we are today. That was the bottom, 1,050. We're $300 higher off that bottom. Everything's been constructive from here. Where we go on the next move draws in the attention of people who don't really care that much about gold on a week-to-week basis, and it draws the attention of an investor that says, oh, gold's rallying, I better get in on that.
That's because it's on the mainstream media.
Totally, and that's where we're about to be in the gold market. We're on the verge of a breakout, breaking out of this little range that we talk about in this show, and we're about to be headed into a new world with gold in a bull market.
Yeah, Robert, and following on the heels of the December market, can we call it a crash? 19.5% in a single month. So following on the heels of something like that, plus coupled with a breakout 300, 350, 400 up in gold, it doesn't take a lot of attention to start building some serious momentum. And we certainly all remember what happened when gold built momentum back in 2010.
Yeah, I mean, right now we're 300 up from that low that Robert talked about, the 1,050. 400 above that point puts us in a whole new range, a whole new channel. Now we're back to the days where we were witnessing 50, even $100 a day move in the gold price. And that just wasn't very long ago for us. Well, we get a lot of listener feedback each week just asking, should we be focusing so much on the technical aspect of the precious metals prices. And we try to come back full circle into the fundamentals. So let's talk a little bit about why this price action is occurring, right? Because King Dollar sitting here with me, Robert hasn't talked much on that because it hasn't been doing much, right? So this is some price action where the dollar has not moved out of its channel the entire time. We are seeing reactions to things like what you talk about, that November, December equities market crash. We're seeing political uncertainty. We're seeing geopolitical strain, certainly, right? We're seeing financial and economic concerns now, especially coming out of the Eurozone and out of Asia. So all along, gold is your barometer telling you that. So yes, we're going to focus on the technical, but you have to step back even further, as Robert brought up, and take a more macro viewpoint as to what are the underlying fundamentals, and that's sort of what they are. And then today, we had a little bit of help just with the supposed non-reaction of the Federal Reserve. So anytime you see central bank intervention or the lack thereof, you're also going to get a movement in the price of gold.
With the dollar index, we've talked a lot about this declining trend line that was the breakdown that started a little trend line there, and we've followed that trend line out and extended it. And early 2019, we had the dollar index come down right around 95, and it respected the line again, and then ran up a little bit up above 96, came back down and tested it again. We've since put in just a little bit of a lower high just recently. Miles points out on the chart that the dollar index formed a head and shoulders pattern here in the chart. So is it coming back down to test that trend line we've been following for a while? We'll see. I think long term, obviously, the dollar is headed much lower. Gold's headed much higher.
Well, and moving back to 2017 and into the first half of 2018, that decline can take a long period of time, right? And it's oftentimes going to react to things like what the Bank of Japan said today. They're actually going to start lowering rates further, right? That's going to put actually a little bit of wind in the sails of the U.S. dollar on that dollar index. And they're talking about increasing their ETF buying again. So they're going into increased easing measures to try to stimulate economy and try to stimulate the markets. But over time, as that dollar weakens, we're not talking about a pullback that takes 2 to 3 weeks. It can take 6 to 7 months. So before you guys close us with the white metals, I'll just briefly recap, not a whole lot of action and certainly was predictable with the Federal Reserve not expecting to rate hike this coming month or in the subsequent months. But the minutes in the announcement from the Fed today kind of prove that. Powell basically said it's unanimous that they determined they will be patient with raising rates. So not a whole lot of action there. And the fact that it was unanimous tells me a lot, too. It's not like they've got some sort of infighting going on and that they're wishy-washy. This is clearly a change in direction, and I think that we're many months out from another rate hike.
You bring up the Federal Reserve, and we'll read a little quote by them, and then we'll all laugh about it. Because I can prove them wrong. In light of global economic and financial developments and muted inflation pressures, ... Muted inflation pressures. Let's talk about that for a minute. Let's see. What's the barometer maybe of inflation? Would it be the price of gold?
Well, we've got the Barack Obameter that set the precedent in his 8 years, almost doubling the national debt. And certainly Trump, love him or hate him, I think he's up about $1.8 trillion in his first 2 years.
And that'll continue because like we said last year, it's inflate or die, right?
Yeah, that's what drives it. That's the driving the inflation. So is that muted?
So it's muted, right? Okay, so the price of gold's just rallying for no reason. Yeah, there's not an expectation of inflation there at all. So I think that's pretty comical.
They can mute it, but gold is the speaker volume going up.
Sure. Well, muted inflation is still inflation, right? It's not like they're saying deflation or...
Well, yeah. They tell you that it's 2%. All right, so your $100,000 sitting in your money market account now is worth $98,000. How's that make you feel? Is that muted enough for you?
Well, muted makes me think about completely silent because when I mute my television, it goes completely silent. So are they saying that inflation pressure is completely silent? Well, don't they have a target for inflation? So they're admitting failure by saying that it's muted because they have a target of 2%. So which is it really?
No, that's exactly why. No, they don't. But they know enough, and that's why they're not raising rates.
True.
Well, I think it's muted enough to push silver up to the highest price since July last year.
And platinum had a good bounce there, too.
And palladium is in the middle of nowhere. perhaps.
Well, yeah, but it did break through your target price. I mean, you called for $1,450 a while back, and I know you've kind of blown through that. Where are we right now?
So we did push, I believe, just up to $1,500 on the Palladium price. So that $1,450, I'm glad it did hold. Obviously, we're stabbing in the dark when you're at prices that have never been anywhere. So glad to see Palladium continue to find whatever its next high is going to be. Silver clearly coming back up to the previous high, and I think we could see another 3 drives pattern, which probably pushes silver up to about $1,650 on this move. And then, of course, platinum making this sort of W-looking shape here in the charts. We've had that rising floor on the platinum price, went below it, came above. We're back up above that 50% line and putting in a new high. So everything in the metals across the board obviously has been very strong over the last week and should be interesting. With the Fed announcement of no increased interest rates, it'll be fun to see how gold continues to react to both the fundamental and the technical things that we're seeing in the charts.
Guys, I would like to say before we close, though, Palladium being what it is, this, indescribable trend that we're witnessing, I do think it's time for us to break it down. We will go into a show in the coming weeks if Palladium continues on this course, and we're gonna show you what it's used for, what's potentially driving this price, and why we still feel as if platinum's the way to go.
So that's going to do it for Golden Rule Radio this week. We thank you for stopping by. If you like what you heard, hit the subscribe button, ring the bell, head on over to our website, McAlvany.com, Facebook, McAlvany Financial, Twitter @ICA Gold, or give us a call anytime, 1-800-525-9556.
Thanks for listening. Have a great week.